In this video, we will discuss how to account for notes payable. Companies record obligations in the form of written notes as notes payable. Notes usually require the borrower to pay interest. Companies frequently issue notes payable to meet short-term financing needs, but notes are issued for varying periods of time. Those due for payment within 1 year of the balance sheet are classified as current liabilities. To illustrate the accounting for notes payable, let's assume on September 1st, this company signs a $100,000 12% 4-month note maturing on January 1st. This company will receive $100,000 in cash, so the journal entry to record this transaction will debit or increase cash for $100,000 and credit notes payable for the same amount. If this company prepares financial statements on December 31st, it must make an adjusting entry to record 4 months of interest. The calculations for interest expense is the principal of $100,000 multiplied by the annual interest rate of 12%, and then we need to prorate the interest for the amount of time the note is outstanding. In this instance, it's 4 months or 4/12. The interest expense is $4,000. I like to think of this calculation as P times IR times T, where P represents principal or face value. We can use those terms interchangeably. IR represents interest rate, and just remember that's an annual amount, so we do need to multiply that by time if the note is outstanding for something less than 1 year. The entry to record interest results in a debit to interest expense for $4,000 and a credit to interest payable for the same amount. In the December 31st financial statements, the current liabilities section of the balance sheet will show notes payable in the amount of $100,000 as well as interest payable for $4,000, because both of these amounts will be paid within 1 year. At maturity, the company must pay the face value of the note as well as interest. It records the payment of the note as follows. We would debit notes payable for $100,000. We would also debit interest payable for $4,000 and credit cash for $104,000.